All right, hi everyone. Welcome to today's webinar brought to you by Vantage, where today we'll be beginning series 1 of support and resistance, taking a look at pullbacks, overlaps, and swings. All right, before we begin today's webinar, just want to let you all know we're streaming directly into the Vantage app as well as over Zoom, so do not hesitate to drop your questions in the relevant Q&A boxes as we progress through today's webinar. All right, before we begin, please take note of the disclaimer. The information, context, and opinions which are expressed in this presentation and on the following slides are solely those of the presenter and not necessarily those of Vantage and are solely used for educational purposes as they do not constitute investment advice and or consultation on how a client should trade. Also take note of the risk warning that comes with trading margin forex and CFDs as they carry significant risks and is not suitable for all investors. My name is Ketan Ramachandra, and this webinar series is brought to you in a special partnership between Vantage and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Right, so for today, right, beginning in series 1 of support and resistance, we'll take a look at how we can use swing highs and swing lows in the identification of significant support and resistance levels. How can we identify the suitable starting point? And then we'll take a look at how can we identify pullbacks and overlaps, and how can we use them to help us define support and resistances, which in turn can be used as potential take profit targets or potential stop loss levels as well. And of course, we'll be looking to see how we can combine all of the various support and resistance levels, basically swing highs, swing lows, pullbacks, and overlaps. And of course, how we can overlay all of these with using Fibonacci analysis, such as Fibonacci retracements, projections, and extensions. Right, so starting off with the basics, trying to use swings to identify potential support and resistance levels. How can we do that? Right, but first of all, basically what are support and resistances? So basically the price at which an assets tends to stop falling is known as the support, and the price at which an asset stops rising is known as the resistance. Right, so we can use technical analysis tools such as trend lines, moving averages, chart patterns to help us identify support and resistance levels. In addition, we can also try to identify significant swing highs, swing lows, pullbacks, and overlaps as well to help us identify those key resistance and support levels. Now, on this diagram here, we can identify a couple of significant swing highs, swing low as well, and these can be identified as resistances and support respectively. Now, when we try to identify significant swing highs and swing lows, we are looking for significant movement. We're not looking as such as we see it here on this chart, and not insignificant moves as what is shown in this GIF here. Right, movements that are too small result in insignificant swing highs and swing lows, which generally don't function as very strong support or resistance areas. So typically when we begin our analysis, we're going to start our analysis on the H4 time frame and above, because when we're on the H4 time frame, we are able to identify significant swing highs and swing lows, which generally tend to function as much stronger levels or much stronger areas of support and resistance. So take note, whenever we begin our analysis, it has to start on the H4 time frame and above, so as to give us a nice overview of the current instrument that we are analyzing, as well as being able to identify a clear market structure and identify significant swing highs and swing lows. Right, you can see here that there's several swing lows here that we can see. Insignificant swing lows at the same time. We can also identify significant swing highs as well. Right. Now, when we're on the H4 time frame and above, we get to observe a clear market structure, and we're also able to observe very clean and obvious peaks and troughs. So when we're able to do that, we can then identify the significant swing highs and swing lows. Right, so once again, as I mentioned, anything on the H4 time frame and above enables us to view a chart that has clear market movement, enables us to spot obvious peaks and troughs, and this also would imply these are significant moves up and down, which in turn, right, when we identify significant swing high resistances and support such as these they tend to function as very strong areas of resistance and support. Now here, right, on this chart, again, we can see several significant swing highs being identified at points 1, 2, and 3. Even we can spot several significant swing lows as well, right? So when we see clear market structures such as this, we are able to spot the clear troughs and bottoms and peaks. We're also able to identify clear market movement, and we can see the overall trends as well, right? And once we're able to identify the trend, we can also trade in the direction of the prevailing trend as well. Now, support and resistance levels can also be used to identify potential take profit targets as well as stop loss levels. However, using a recent swing high or swing low as the only level sometimes may not be as strong as we wish. And typically, it would be better if there is at least more than one swing high or swing low that accompanies a certain area. Right, so in this instance here, where we can see several swing highs taking place. In fact, this looks like sort of like a triple top here, forming a very significant swing high. So we can see when you see some market structure such as this, typically this highlights or identifies or points towards a potentially strong, significant resistance barrier. Similarly, one swing low like this, depending on the size of the swing low, may be weak, but in this case here, you can see the move down and the reversal to go significantly higher, to bounce higher, is actually a very strong move. So this by itself can function as a pretty strong support area as well. Now, of course, if there are at least two swing highs or swing lows that align closely, it is a much better level to use. So we typically will try to find areas where these levels might align. Now, it does not need to be at the exact same level as long as it's an area that is close enough. Now, on this GIF here, we can spot several swing high resistances, right? And right, we have a swing high resistance here at A, another swing high resistance at B, swing high resistance at C, swing high resistance at D, E, F, and G, right? You can see here there are many several swings that we can identify on the upside here. However, we want to try to find a level that encompasses as many swing highs as possible. And that happens when we started from this candle here at point A and drag it across. You can see here it's managed to capture as many swings as possible. And this helps us to identify a pretty strong barrier here rather than trying to capture it at this level, right between D and F, right? When we start from point A, we can see it captures most of the levels, most of the swing highs, which helps us identify a pretty significant area. Now, picking the starting point is important as well, right? There's several guidelines that we should adhere to, right? We have to, first of all, we'll check whether if there's a swing high or swing low that has been formed, or whether there's a pullback or overlap level as well, right? So if we spot either one of these four types of resistance or support, that typically would be a good starting point. And depending on the time frame that we're on, whether we're the H4 or H1 time frame, we should try to go back as far as possible. Intersecting the wicks is preferred as well, as you can see here, right? When we draw a horizontal line from point 1 to point, this is 2 and 3, but we draw it through these 3 points, we can see that it has captured the support and resistance very well, right? We can see at point 1, we have resistance, at point 2, we have support, then at point 3, we have resistance again. So typically when we start a level such as this, where we draw the horizontal line across a level such as this, and it captures as many resistances and support touches, right? That would imply that we have picked a relatively strong area as a potential resistance or support. Now here, in this case, right, you can see when we start this, when we begin this horizontal line from this point here at 1, and you can see it's actually not capturing the body of the candle here, but it does capture the wicks here very nicely. Right, so generally, right, you can see here, right, this is still a pretty good level to start, not the ideal level, but you can see that it has captured many resistant touches as well as a couple of support touches before capturing another resistance touch once again. Now here, in this example, when we start from point 1, you can see that this horizontal line actually cuts through a market structure several times here, leading to a uh, very messy cut. Basically, here we can see it captures the resistances very clearly. However, because of this part here, it doesn't really capture any resistance or support area as well. It only captures this support area well. So in this scenario, right, we would not start the horizontal level from point one. We would actually start it from point two, right? So take note, right? When we see, although this is a pretty decent support area here previously, right? We see a pretty decent support area here, double bounce taking place here. Then we see resistance, but because we have a couple of cuts here and we have this drop down here, right? Typically, this part here is not a very clean market structure, right? So typically, when we see something like this, we would tend to start drawing the horizontal line from point number two, right? Because you see a significant swing high being formed here, and of course at these 2 points as well. And once the swing high resistance gets taken out, right? When you see a significant resistance area like this get taken out, it is likely to function as support. So that's how a support is also uh, is identified. So when price breaks above a prior significant resistance area, that prior resistance area now has the potential to function as a potential support area. Right, so take note of that as well. And conversely, it works the other way as well. When the support area gets broken, right, when a prior support area gets broken, it can tend to function as resistance. So one example uh, would be here, right? We see a swing low being formed here at point A, and then once this level at point A gets broken, we can see it runs into resistance once, twice before finally breaking higher. So you can see a prior support beginning to act like resistance. And at the same time, we can see a prior resistance potentially acting as support as well. So do take note of that. Now, what are pullbacks and overlaps? Overlaps, we'll take a look at these two types of support and resistance areas. Now, a pullback level can be a strong level of support or resistance, right? And from the perspective of a pullback support, it breaks out from a previous resistance level, and then price is now dropping back to uh, to revisit again, right? So when a pullback aligns with a Fibonacci level, it can function as a much stronger area of support. And pullback resistance works well when the price breaks a significant swing low and starts pulling back up to it. Now, the area is likely to function as even more significant barrier or support if there are multiple Fibonacci levels lining up with it. So in this GIF here, you can see there's a swing low being formed at point number one, swing high at point two, right? And then at point three, price breaks below the initial swing low at point number one. Right. So when price breaks below this initial swing low at point number one, this prior support area now has the potential to act as a potential resistance area. And then as price makes a swing low at point number four, it starts to climb higher, we are then able to run a Fibonacci retracement from the starting point zero to the swing low at number four. And in that instance, we can see that the 38.2% Fibonacci retracement actually aligns very well with the pullback resistance. Remember, when price breaks below the prior swing low that was formed on point one, that swing low or that level now has the potential to act as resistance. And then as price makes a retracement of swing low number four, we can then run a Fibonacci retracement. And if we happen to have a Fibonacci level that aligns pretty close to the new resistance, that's quite likely going to be an area where we can expect price to stall and get rejected off it. Right, now here, right, we can see this is an example of a pullback support. So previously, this barrier here at R, let's call it R1, served as a multi-swing high resistance, where price has been rejected 3 times, right? However, at point number one, point number two, and three, we see resistance. However, at point number four, we see a bullish breakout. So as that bullish breakout materializes, what was a prior multi-swing high resistance now has the potential to act as support. So that's how the first support is identified. And this type of support is labeled as a pullback support. So you can see here, a pullback support is born when a prior resistance gets taken out. So in this case, the prior resistance was a multi-swing high, and once the bullish breakout took place at point number 4, that prior resistance now has the potential to act as a support, and this type of supports are labeled as a pullback. So as price returns to this level here, we're looking for it to stabilize before resuming the uptrend, right? If this bullish momentum has further traction, right, this pullback level can serve as a decent opportunity to go long on that instrument once again. This is the example of a pullback resistance. In this case here, this level S1 initially begins as a swing low, right? We can see we have a multiple swing lows taking place at points number 1 to 3. Right, multiple swing lows taking place, very strong support area. However, at point 4, we see a bearish breakout materialize. Price breaks through the support area. So now this prior support area has the potential to act as resistance, right? So this resistance is labeled as a pullback resistance. So we're expecting price to pull back towards the resistance barrier. Now this is identified as pullback resistance, probably ready to stall around this level before resuming the downtrend, right? So basically, it's the complete opposite, right? The 180 opposite to a pullback support. So once again, pullback resistance is born when price breaks through a major support area. In this case, in this example, we can see the prior support was a multi-swing low level, which finally got taken out at point number 4, and then that area now can potentially act as a resistance barrier. All right, now we're going to move on over to the live charts and trading view and try to identify significant swing highs, swing lows, and pullbacks and overlaps, and see how we can put it all together and overlay it with Fibonacci retracements as well. It's much better to go through this exercise on the live charts rather than going through this old slides here. Or not old slide, but the static slides here. Now let's move on over to the charts and trading view, right? And let's use the euro, for example, right? Let's use the euro as an example. And I'm on a daily time frame here, but we can we'll start the analysis on the H4 time frame. But for now, I just want to highlight when we are on the higher time frames, right? We can identify clear market structure, we can identify clear market trends, and we can also identify significant swing highs and swing lows, right? So we can see here, right, when we right size the chart by clicking on the X and Y axis, we can identify a downtrend between October of last year till middle of Feb of this year. And then after that, very clearly, we can see a very significant uptrend with the euro rising from 1.0300 all the way up to 1.1822, right? And from March onwards, we can observe a very clear uptrend. And in between all of this, right, we can also identify significant swing highs, right? We have a very significant swing high resistance currently being formed here. On 2nd of July, we also have a swing high resistance that was formed here on 13th of June, which is in the vicinity of the prior swing high resistance that was formed on 21st of April. You can see here, this was a very significant top that was formed in the 3rd week of April, and is pretty much where the euro stalled once again in middle of June. So you can see why it's important to identify prior resistances such as this, because this is where we can expect prices to stall and make a small pullback. And then when these levels, prior resistances get taken out, right, we see a bullish breakout take place. This shows us there's a lot of momentum, and we have the opportunity to ride the upward trajectory as well. So when a bullish breakout takes place above a very significant multi-swing high resistance, right, we have the potential to try to ride the wave upwards, and at the same time, this prior resistance can now function as support as well, right? And in terms of swing lows, right, we can spot a very significant swing low that was formed here on 13th of May, pretty much where the prior swing high was formed on April. So you can see here, this was a prior swing high resistance in the 1st week of April when the bullish breakout took place on 10th of April. This prior swing high resistance now has the potential to act as support, which is what has happened very nicely on 12th of May, right? So hence, once we start the analysis on the higher time frames and above, we are able to look at clear market structure, we're able to identify the obvious trends and direction, and we are able to identify the significant swing highs and swing lows, which help us identify potential areas of resistance and support, right? So this is why it's important to start on the higher time frames. Now let's just do one example on the daily time frame from the euro, right? And then we'll do another example on the H4 time frame as well. Right, so we can see here, right, the euro forming a swing high resistance at around 1.1805. So this could be an area where we can identify the first major resistance. And remember, we have to look back as far as possible. So for the euro, let's just scroll out, and when we zoom out, and when we look at the chart for the euro in August of 2021, and we can actually spot a multi-swing high resistance that had been formed on July 2021, and then again on September 2021, so the end of July. And early September, we can spot we can spot two swing high resistances, showing us a very strong multi-swing high barrier. So this is where we can actually identify a strong resistance as well, right? So not only do we have the current swing high that is being formed, right? Not only do we have the current swing high that was currently formed here on 2nd of July, we also have this current swing high formed on 2nd of July, right? Is at 1.1813. Not only do we have this swing high resistance, by zooming out and looking at the chart all the way back in 2021, we can also spot another multi-swing high resistance barrier that sits at 1.1884. So we can use 1.1884 in the identification of the second resistance. And we will use the current swing high that was formed last week as the first major resistance, right? So that's why it's important to start the analysis on H4 and H daily timeframes, and as well as zooming out to give us to take a look at what has happened in the past to see where we can identify potential resistances. Now, in terms of support, remember, as I mentioned, there's a significant swing high resistance formed here on 21st of April, and another significant swing high being formed here on 12th of June. And once that level gets taken out, this is where we can identify a potential pullback level. So that's how we've identified, or that's how we've labeled the first support. The first support is a pullback level at 1.1572. Now, for the second support, right, when I look across this level at 1.1377, I can spot another nice overlap. I'll explain why. Right, when I look across this level, I can see a little bit of resistance being formed here on 6th of May. I can spot resistance once again on 27th of May. And then after price breaks higher on 2nd of June, I can see like a nice double bottom being formed between 4th of June and 10th of June. So this creates a pretty decent overlap and 1.1366, which we can identify as the second support, right? We can label this level, this overlap, as the second support. So take note what we have here at 1.1366 is an overlap level, and what we have at 1.1572 is a pullback, right? So you can see here, price has yet to bounce off this level, so this level can't be labeled as an overlap just yet. However, if you do see the euro make a much deeper correction, falling all the way down towards 1.1572, and should it bounce off that level, that's when this pullback at the first support can be labeled as the uh, overlap. But for now, this is a pullback level at 1.1572, and what we have at 1.1366 is an overlap level. Right. We also talked about Fibonacci. Right now that we've identified the resistances and support, we can now use the Fibonacci retracements. Remember, the Fibonacci retracements are going to act as complementary factors to the analysis. Right. We don't start identifying support and resistance, beginning with Fibonacci retracements. Right. The the retracements are going to come in after we have identified significant resistances and support areas based on the H4 and daily timeframes, right? So now that we've done that, we can run a Fibonacci retracement from this swing low on 12th of May, going up to swing high on the 1st of July. When we look at all the fibs, we can see that 38.2% retracement sits close enough to the first support, while we can also see the 61.8% retracement aligning very well with the second. So of course, in this case, on this uptrend here, we're going to be using the 38 and 61% Fibonacci retracements. And for this first support, it's more of a zone that begins from 1.1537 going up to about 1.1578, right? This is where the support zone, first support zone for the euro sits at. Now, there's also a much larger uptrend that begins from mid-Jan, right? 13th of Jan. From this swing low, we can run another Fibonacci retracement, ending with the high of 1st of July. Taking a look at all the fibs. In this case here, we can see that 33.6% is sitting in no man's land, right? It's sort of in between the first and second supports. That's fine, right? We don't need to use it. Remember, don't force the Fibonacci levels onto the analysis unless it aligns close enough to a predefined support areas in this case, or if it doesn't sit close enough to a predefined resistance area. Right, so with this uptrend that begins from 13th of Jan, right, this Fibonacci retracement is currently of no use because we can see 23 and 38.2% retracements do not sit anywhere close enough to the first or second supports. So remember, never force the Fibonacci levels onto the analysis. Right. So in this case here, right, the purpose of identifying 1.1572 as the first support and as a pullback support is to look for a potential bounce off this level. So should we see a much deeper pullback materialize this week or perhaps by early next week, and if you can see the euro stabilize within this support zone that begins from 1.1537 to about 1.1572, if we can see price hold up, that's where we have a decent opportunity to go long on this currency pair. Remember, what we're looking for is to see a clear reversal take place, right? Based on a daily time frame, right? We would like to see the candle opening in green, right? And perhaps uh, at least we should see the first half of the candle, right? If it's a daily candle, we'd like to see at least the first 12 hours of that candle be closing in green, to be in green, to give us a little bit of conviction or higher conviction that that bullish reversal or that bullish bounce is indeed taking place, right? So I would say wait for price to react off the level, right? And as it's bouncing off the level, that's where we can identify an opportunity to go long on the euro once more to try and ride the wave to the upside. So remember, do not, for me, right, I would not be placing a buy order at exactly the first support or within the first support zone, but rather I would wait to see price react off the level, and as it's coming off it, right, that's when we can get a better, certain higher, we can get a higher level of conviction and try and ride the upside. So remember, do not, for me, how I would trade it would not be to place a buy order at the support level as price is coming down. I would actually wait for price to stabilize and make a bounce of this level before making a move, right? So in the example here, if you look at this on the H4 time frame with this swing low that occurred on 12th of May, we can see here on 12th of May, this swing low here, right? And when we look at it on the H4 time frame, we can see as price has reacted off the support. Remember, this was a support area here. This was a pullback level here, right? I'm not placing a buy order at this level. I'm actually waiting to see if the euro is going to stabilize at the pullback and make a clean move and make a bullish reversal. So you can see here, it takes a while for the euro to stabilize, right? You can see here in between 12th of May, 5 a.m. GMT and 12th of May, 9 p.m. GMT. The euro is still sort of holding up above this level, but on Tuesday onwards, right, early morning Tuesday GMT time, we can see price start to make a clean reversal. So when you see at least two or three candles generally trending higher, that's when we get more conviction or a certain level of confidence that we are indeed looking at a potential bullish reversal that is currently in progress or that has taken place off a prior pullback level. So remember, wait for price to make that clean reversal, and we can do that by trying to look at it on the 4-hour time frame and even perhaps on the 1-hour time frame. If we look at it on the 1-hour time frame, and we can also spot similar movement, right? We see a similar movement, and then we get a higher level of confidence that bullish bounce has indeed materialized, and we have an opportunity to try and capture or try to ride the wave to the upside here. Right. So similarly, in the current context, right, this pullback level, right, this pullback level that we have identified at 1.1572, right? Once again, I'll be looking for price to react off this level or close to this level and see a clear trough being formed, right? You definitely would like to see a clear trough being formed before trying to ride the wave to the upside, right? And at the same time, also look to see if market structure has been broken, right? You can see here on the H4 time frame, we can spot a descending trend line between 12th of June and 20th of June. And then before the bullish breakout takes place, we can also see a nice trough being formed. And this trough gets formed, price breaks out of this market structure here, and we really see the upside accelerate. You can see here, even from the breakout point, onwards, right? The euro has jumped 2.4%, rising nearly 280 pips, right? No one's going to catch it at the exact bottom, but if you can get it close to the bottom, or if you get it as the bullish breakout materializes, you can see there's still room to try and capture as much upside action as possible. So in a similar fashion to what we have at the present moment, right? We can spot a nice descending trend line here, or in fact, it's almost like a downward channel, right? You can see this is actually a nice downward channel, or it was a nice downward channel, something similar to what is currently being built for the euro since 1st of July, right? So once again, if you do see a clean trough materialize, and at the same time, we see price break through this market structure, right? We may have there may be a potential bullish breakout, and we can try to capture the move up to the upside as well. So remember, although uh, there's a major pullback level here at 1.1572, right? If price does not reach all the way down here, and however we see a bullish breakout through this downward channel, right, that could be our signal to go long on the euro as well. So there's two scenarios that could take place, right? On the 4-hour time frame, we can spot a nice downward channel. Looks similar to the downward channel that was formed in middle of June. And if we do see a clean break out of this channel here, we've probably got good momentum, strong bullish momentum to try and capture the upside as much as possible. Right, that's one scenario. The other scenario would be to see a continued pullback all the way down towards the first support. And if you can see a nice trough being formed off the nice support, and of course, if it breaks out of that downward channel, right, that gives us a good opportunity to go long again. So remember, it's not about just placing buy orders. At least for me, it's not about placing buy or sell orders at the support and resistances exactly, right? It's more about waiting to see whether has price made that reaction of that level, and then to see whether does it break out of additional resistance areas or support areas before trying to capture the move to the upside. All right, so this is for the euro here, right? So we can see a good example of how prior swing high resistances formed a pullback level, and how a prior swing high resistance also again functioned as pullback at first and then proceeded to become an overlap, right? So this is pretty important as well. We may not see another pullback all the way down, right? The scenario, if you look at it, the setup looks a bit similar to what had happened in middle of June. You can see as price gets rejected off 1.1580, the euro is pulling back in the downward channel. It doesn't come all the way back to this overlap at 1.1365, right? In fact, it actually finds support at a pullback level, right, at 1.1449. And you can see here it actually finds support at the pullback level, forms a trough, and then breaks out of the downward channel. So looking at it on the 4-hour time frame, right, you can see here there's a swing high resistance being formed on 2nd of June, another swing high resistance here on 5th of June. When price breaks out of this level, this prior resistance can function as a potential pullback. We see the first bounce taking place on 19th of June, and the second bounce on about 23rd of June. And then as price breaks through the upward channel here, or the downward channel, the upward trend line on the downward channel, we really see the uh, momentum gain for the traction, right? So you can see here, price may not necessarily always pull all the way down to the second support. It may find another intermediate support here as what we see at 1.1445, right? And maybe what we're looking at is a somewhat intermediate support level at 1.1688. You can see here, there's a small swing low formed on 27th of June. This is also where the euro found support on 7th of July, right? This is Monday, beginning of the week. Finding support once again on Tuesday, so it already has bounced off 1.1688 three times. So that means, right, perhaps if we do see a clean break through the downward channel, we're likely to see that the euro climb even higher. So we may not see the euro drop all the way down towards 1.1572. So take note, right, there's a pretty decent intermediate support at 1.1688, where the euro has already bounced off three times, right? And should we see a clean break through this downward channel, that's probably our signal for an opportunity to go long on the euro and try to ride the upward wave as well, right? Perhaps we may not see a pullback all the way down towards 1.1572. So this is where we need to exercise a bit of flexibility as well, right? Just because we've identified a very significant support level at 1.1572, it doesn't necessarily mean that price is always going to be drawn to that level, right? There may be other reasons, right? Fundamental reasons for price to reverse and break out of this downward channel here. All right, so this is a good example of using the euro on a H4 daily time frame to identify key support and resistances, and at the same time overlaying it with Fibonacci retracements as well. Right now, let's try to look for another example. Right, so instead of using the euro, let's try to use another currency pair, and in this case, we can use the dollar yen, for example. Right, let's try to use the dollar yen as an example here. Now we can see on the daily time frame when you right size the chart, right? How do you do that on TradingView? Just click the X and Y axis and it right sizes the chart, and we can see that between middle of Jan, or since the beginning of Jan till the end of April, dollar yen was in a prolonged downtrend, right? We can see a series of lower highs, lower lows, and we can see it moving from top left to bottom right. Now, however, since the end of April till now, we can actually see the dollar yen is actually trading in a relatively sideways zone. Although it's a pretty big zone, but nevertheless, you can actually see, right, it's actually trading between 142 on the lower bound and about 148.50 on the upper bound here. As you can see, what was a clear bearish momentum on downward trajectory, it has now turned into sideways action, right? Sideways price action. So when we identify sideways price action like this, it also helps us identify significant supports and resistances, right? So we can see here, in terms of resistance, we've got a significant swing high being formed here on 12th of May. We can even argue this is a significant swing high on 23rd of June as well. So when we do that, we can label now the first resistance at 148.45. Remember the box that I drawn began from here, right? Sideways action, very clear sideways action of this level. This is where we can label the first major support at 142.41. Now, and of course, for the second support, and when we zoom out a little bit, we can spot a very significant swing low that was formed on 17th of September 2024. You can look at this, right? This is a huge swing low that was formed, and it took a long time to be built, right? Between 11th of July 2024 all the way till 12th of November 2024. So a period of 4 months, right? About 4 months, a significant swing low finally got formed in between, right? And this is the area where the dollar yen once again stabilized at the end of April of this year. Once again, as the dollar yen was tumbling, it managed to stabilize within this zone once again. So you can see when we identify prior support areas such as this is a very significant swing low. It's something to keep an eye out as well. So when the dollar yen is falling towards this level here, this is where we would try to identify an exit. Remember, anyone who was short on the dollar yen uh, at the end of March and through April, right, as dollar yen was falling rapidly towards 140.60, 140.50, this is where you would be looking for your exit, right? Any short traders would be looking to book profits within this zone here. Why? Because this was a very significant swing low that had taken place. Typically, when we see strong swing lows or swing highs being formed, they can tend to act as really strong support or resistance barriers. So that means the barriers can then in turn be used in the identification of potential take profit targets. Support areas can be used as potential take profit targets for shorts, and resistance areas can be used as potential take profit targets for long. Right, so you can see here very strong support zone, and this is where the second support for dollar yen is identified. It's at 140.61, stretching all the way down to 139.50, a multi-swing low level that has been in place since mid-September 2024. Now, with dollar yen rising, right, since the second half of last week, right, as dollar yen was rising, and I would have used uh, the body of this candle here, right, as a potential take profit target, right? When I stretch across this level here, and we can actually spot a little bit of support being formed here on 11th of March. We can see resistance here being formed on 29th of May, and of course we can see resistance here on 23rd of June. Of course, we can see this wick rising as high as 148, but nevertheless, we can spot a pretty decent overlap level, and this is where I would have identified a potential take profit target as dollar yen made this clean reversal and started to climb higher, right? So as dollar yen was climbing higher towards from the end of from the second half of last week, right? I would have identified a take profit target or one of the first take profit targets at around 146.50 because I spotted a nice overlap level here. Now, of course, if this currency pair can continue to climb higher, right, then I'll be trying to target 148 as well. Maybe not all the way up to 148.45, but at least the second take profit target would be labeled close or would be identified closer to 148. Now, for dollar yen, right, on this prolonged downtrend, there's a couple of Fibonacci retracements that we can draw. The first retracement that we can run is from this swing high on 28th of March, going down to the swing low on 22nd of April. We can see dollar yen has already climbed above all the retracements from 23.6% to 61.8%, but we can see the 78.6% just hovers above the first resistance, so we can still continue to use the 78.6% retracement, and we can use it to complement the first resistance. Right. There's another retracement that we can run from this swing high on 10th of January, once again dropping all the way down to 22nd of April. Looking at all the fibs for this retracement, we can see that none of the retracements sit close enough to the first resistance. You can see 38% has already, dollar yen has already climbed above the retracements from 23.6 to 13.2%. However, 50% retracement sits a little too far from where the first resistance sits, right? You can see when the 78.6% is very close to the top of the wick, so we can use that, but 50 simply sits too far, so we're not going to use it in the analysis. Now, with this overlap level here at 1.4653, right, this overlap level can now be used as a potential pullback as well, right? As price breaks above this level today, right, it can be a potential pullback. So let's go into the 4-hour time frame, right? So what this tells us is if we can see dollar yen remain above, now this would be now a support level, right? This would not be a sort of like a pullback support level. If dollar yen can remain above this level here at 146.53, we could see a continuation of the uptrend. And this support level here is also where I would identify or I would identify my stop loss just underneath it, right? You can typically you'll give yourself a buffer about 10 to 15 pips So let's just give ourselves, let's just say a 15 pip buffer. So that means below this point here, stop loss would be at 146.33, right? So this we have a 15 pip buffer below the support here. So that means, right, if we do see dollar, now we do see dollar yen pulling back, if we can stabilize above the pullback level at 146.53, or if it bounces off this level and starts to climb higher once again, you've got a good opportunity to ride the upside. And because this is one of a pretty significant immediate support level, I would place my stop loss 15 pips underneath this level, and at the same time, I would identify my take profit target at this swing high resistance that was formed on Monday, 23rd of June, and that level sits at 147.60, right? So you can see here how a prior level, prior intermediate resistance level gets taken out. Price has bounced off it, forming support. Dollar yen looks to be falling down towards this level once again. If it can hold up or bounce off this level once more, we've got a pretty good opportunity to try and ride the upside, and we can try to capture, or we can try to label or identify a suitable take profit target close to the swing high resistance that was formed on 23rd of June, and that level sits at 147.60. And at the same time, we can then use the now support level at 146.53. We identify our stop loss with a 20 pip buffer, and that gives us a stop loss at 146.33, right? So this is how we can use the support as a potential buy entry, or we can use the support to see whether price has made a reaction and then try to catch it as it try to open a position as it starts to move higher, and then you use that immediate significant support level to place your stop loss with a buffer of 10 to 15 pips. All right, so this is for dollar yen, H4 time frame and daily time frame analysis. But on the H4 time frame, we can also spot a nice uptrend. So let's try to run a Fibonacci retracement from this swing low on 1st of July, going up to the high of today, Wednesday, 9th of July. Right on this uptrend here, we can see none of the retracements sit close to this intermediate support. Okay, that's fine. I also don't force the Fibonacci retracement onto the analysis unless it aligns with a predefined support or resistance area. Right, so once again, on a daily time frame, and even on the H4 time frame, we can identify clear market structure. We can identify significant swing highs and swing lows, which help us identify significant resistances and support areas, which in turn can be used as buy entries, take profit targets, as well as identifying suitable stop losses, either just below it if you're going long or just above if you're going short. All right, okay, let's see if there's anything else to highlight. All right, if not, then we'll just let's go to US 500. Right, let's look at US 500. Let's start this on the 4-hour time frame. Right, maybe a different exercise starting directly on the 4-hour time frame. Remember, right size the chart by clicking the X and Y axis, and we get a right size chart, and that enables us to spot resistances and supports as well. Resistance here, probably support here. You can also see like a triple bottom forming support here as well, right? So you can see how looking at it on us on the H4 time frame and above, we can try to identify several support and resistances. And once we do that, now we can try to label those resistance and supports. Of first resistance is the swing high at 6,274. This is based on the H1 time frame. Support here, you can see like a triple bounce materializing at 61.81. This is where the first support sits. And beyond that, there's nothing really else apart from this. But let's just zoom out a little bit, just try and see if we can zoom out a little bit. Actually, if you look at it, there's a nice there's now a nice overlap that begins from 18th of Feb. You can see resistance here, 18th of Feb, 19th of Feb, prior swing high resistance. Then you see the US 500 bouncing off this level on 27th of June. So this creates an overlap that we can use in the identification of the second support. So sometimes it's or not sometimes, but most of the time we'd have to zoom out as well and try and identify prior swing highs. You can see this is a very significant swing high resistance formed earlier this year, and as price broke above it at the end of June, we can see a nice bounce take place on the 27th. So this creates an overlap, which we can now label as the second support. Now right size the chart again, right? And now that we've identified supports, we can run the retracement beginning from this swing low on 22nd of June, going up to last Thursday's high. Remember, this high here is the intraday all-time high for US 500. And in this case, you can see that 23.6% retracement sitting close enough to the first support, and 38% aligns very well with the second. So we're going to keep 23 and 30 and highlight the first support as a zone here, right? And we can see that should we see US 500 pull back all the way into this zone, we may get a good opportunity to go long off this level here, right? But at the same time, I would also uh, take note of this descending trend line. And we can see US 500 has continued to trade underneath this descending trend line since 3rd of July. However, price may not necessarily always drop all the way down towards the first support. If we do see a clean break through the descending trend line, when we are likely to see the upward momentum continue, and then we can use the intraday all-time high as a potential take profit target, right? Not only can we use the intraday all-time high as a potential take profit target, we can also try to use Fibonacci retracements, extensions and projections. So let's try a projection on the H4 time frame. To find the extension, we're going to be running a retracement from this swing high on 7th of July going down to the swing low on the same day. Later time, of course, key extension levels sit at 127, 161%. And when we look at the extension at 127%, it actually aligns very well with the intraday all-time high, highlighting this resistance barrier. And we can then use the extension at 161% to help us identify another potential resistance barrier, and that level sits at 6,310. So we can see here, right? Although ideally we would like to see price return to the first major support and make a reaction of this level before moving higher. However, if we see this descending trend line give way, right, we're likely to see the upward momentum continue, and that could imply that we could see US 500 try and make a good run towards the intraday all-time high, which is where the first take profit target can be identified. And of course, if it can continue to rise even further, we would then target the Fibonacci extension at 161% as the next potential take profit target. All right, so that's all I've got for you guys today, right? Once again, thanks for tuning in into series one of support and resistance, where we look at pullbacks, overlaps, swing highs, swing lows, how we can identify such levels, and why it's important to start the analysis on the H4 time frame and above. And once we identify the key support and resistances, we can then overlay the analysis with Fibonacci tools such as retracements, projections, and extensions. And remember, the Fibonacci levels act as complementary factors to that particular resistance or support area. All right, so that's all I've got for you guys today. Thanks for tuning in once again, and do look out for all upcoming webinars brought to you by Vantage. I wish you all the best in your trading journey, and I look forward to seeing all of you at the next session. All right, thanks everyone. Take care and have a great trading week.